It's Friday, the 5th of February 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. Today's headlines. Scott Morrison was busy yesterday buying 10 million COVID jabs, chatting to Joe Biden and meeting Google's global boss. Plus, the prices of safe investments like gold and bonds tumble as investors increase their appetite for risk. Australia's big energy companies strike trouble and their share prices plummet. And the Australian Open tennis tournament gets the go-ahead despite COVID concerns. The Morrison government has agreed to buy 10 million more doses of the Pfizer-BioNTech vaccine after doing a deal with the pharmaceutical groups. It takes the number of contracted jabs of the highly effective vaccine to 20 million doses and adds to the 50 million doses of AstraZeneca and 50 million doses of Novavax already contracted. Mr. Morrison had a busy day. He spoke by phone to new US President Joe Biden and discussed the US-Australia alliance and regional challenges, including dealing with China. The leaders also discussed the COVID-19 pandemic, the 70th anniversary of the ANZUS alliance this year, and combating climate change. Mr. Morrison also spoke to the head of Google's parent company, Alphabet, Sundar Pichai. They discussed the government's proposed media bargaining code, a code which has so upset Google that it's threatened to withdraw from Australia. Scott Morrison is a good politician. He knows the photo opportunity when he sees it, and rubbing shoulders with global political and business leaders is good for the image. He certainly didn't miss the opportunity yesterday. In overseas news, the British Central Bank has downgraded its economic growth forecast for the United Kingdom from 7.5% this year to 5% on the back of COVID-19. However, the good news is that England's chief medical officer said the UK was past the peak of the most recent wave of coronavirus cases. Experts in the United Kingdom said there were around 4,000 variants of the virus that causes COVID-19. It means vaccine manufacturers will need to keep working to improve their jabs. And McKinsey & Co., one of the world's blue-chip consultants, has agreed to pay $573 million to settle investigations into its role helping turbocharge opioid sales in the US. It comes after lawsuits claimed McKinsey worked to drive sales of Purdue Pharma's OxyContin painkiller amid an opioid epidemic that's contributed to the death of 450,000 people over the past 2 decades. Under the settlement, McKinsey did not admit wrongdoing or liability. Locally, one of the trends in the market is the growing appetite for risk. During 2020, in the midst of the pandemic, investors wanted safe assets. That's why bonds were so popular, so too gold and less risky stocks. But that's changed. As the economic outlook has improved in Australia, North America and other parts of the globe, safe assets are no longer the flavour of the day. 10-year bond yields have been creeping up recently, and yesterday moved above 1.2% for the first time in 10 months. Demand for government-backed bonds, safe investments, has fallen, pushing the price lower. That means returns or yields are higher. That change hurts stocks like real estate investment trusts and infrastructure because they're seen as safer equity assets and alternates to bonds. But if bond yields are rising, these stocks are less attractive. Yesterday, Sydney Airport's share price was down 3.7% and Transurban was off 2.2%. Gold stocks have been falling as the price of the precious metal stumbles, in part due to a strong US dollar and also because of the improved global economic outlook. Overnight, the price of gold fell below $1,800 an ounce for the first time in 2 months. Australia's 2 biggest power and gas suppliers have warned of significant and ongoing damage to their businesses from tumbling electricity prices and uneconomic renewable energy projects. AGL warned its December half-year profit included a whopping $2.6 billion write-down. AGL is Australia's largest renewable energy group, but deals to supply wind power signed a decade ago are now uneconomic. Meanwhile, major competitor Origin Energy said that a number of factors had materially affected its outlook. Origin's share price fell almost 7% and isn't far off decade lows. National Cabinet meets today and finding alternatives to hotel quarantine is on the agenda, with states wanting Canberra to take some responsibility for the programs. But the Prime Minister has dismissed calls for a wholesale shift in accommodation, saying the best health advice says hotels were the most effective way to deliver quarantine for travellers at scale. But the Prime Minister conceded the government is in talks to build a supplementary quarantine camp at Toowoomba Airport. Retailer Nick Scarley said profit last half nearly doubled. That's good news, but typical of many retailers, there was a challenge. There's a global shortage of manufacturing and logistics capacity because of COVID-19, so sourcing and delivering goods became much harder. Its share price ended down a touch under 1%. The Bureau of Statistics released trade data showing a surplus of $6.7 billion in December, supported by gains in coal, iron ore and gas. While slightly less than forecast, it was the largest surplus in 6 months, and it's now been 3 years since trade was in deficit. That means Australia is making more money from what we sell than paying out in what we buy. In other words, trade is adding to economic growth. And there's been plenty of debate about whether the Australian Open tennis tournament should go ahead, but Tennis Australia CEO Craig Tiley said it will go ahead with the draw set for this afternoon. That's the Fear and Greed business headlines for today. Make sure you've hit subscribe so you don't miss out. There's also more in today's full Fear and Greed podcast, including an interview with Sean Hunt, the local boss of Marriott International. I'm Sean Aylmer. Enjoy your day.